Looking for some Texas-sized returns? Well, my next guest, Craig Hodges of the Hodges Funds, might just have the stocks for you. Welcome, Craig.
My pleasure, Greg.
All right, let's start off with Atwood Oceanics. This is a deep water driller based in Texas. Why do you like it?
The deep water drilling area is probably our favorite area of the energy business. There's very high barriers of entry. It's tough to get in that business. They're finding major discoveries in the deep water. That's where the biggest deposits are. And so we believe there'll be a deep water rig shortage in 2014, which will drive day rates up. So trading at about 8 times earnings, Atwood should have a pretty good upside. I think the stock trading here at 50 could earn probably $7.50 next year. So it's got some nice upside.
Well, another Texas-based stock, you can sense the theme here, is Trinity Industries. They make rail cars. Why do you like this one?
Yeah, it's another company that's got a booming business, even in this economy. They make rail car, and of course the train business is very, very healthy. There's a lot of product being moved from Mexico, cars being moved all over. Now, a big theme now is oil being moved from the Bakken Shale, from the Eagle Ford Shale, and Trinity's actually making a lot of this rail car. So Trinity's very early in their cycle. Probably earning the $3.50 range. Stock's made quite a move, but long term, I think, like I said, long term, I think that stock will do well because they are very early in their cycle.
Now, U.S. Airways was not always based in Texas, but they're merging with AMR with American. So now I'm going to consider it a Texas-based stock because AMR is down there. People generally don't make a lot of money on the airlines.
Right.
Even Kramer only recently came out and said you can buy airline stocks again. Why do you like this one? Not just because it's from Texas, right?
Right. Amen. Amen. No, we've been in the airlines for about a little over a year now, and we've done real well in them. But it's a business that's changing. It's a little bit like the rail business in 04 when we got in that. There was 30 years where they were uninvestable. Same thing with airlines. There's been consolidations, there's been mergers. They're finally right-sizing the business, and they're now charging for bags. They're charging just to get on the plane early. Yesterday, I paid $15 for Wi-Fi access, which is double what I paid like 2 months ago. These companies.
Well, you were in New York too.
Right. Well, yeah, but they really are having a whole lot of new revenue streams. So I think they finally have changed the business. We've had the $100 oil for 5 years, so they're used to that. They've modeled their company after that, and they're very under-owned. Like I said, you ask 100 managers, 99 say they wouldn't buy an airline. But U.S. Air American will be the dominant airline going forward because they've got a tremendous route system.
Well, it has to be because everything's bigger in Texas, right?
Amen.
All right, planes, trains, and oil rigs. Thanks for coming on.
My pleasure, Greg.
Thank you for watching The Street.